Well, hello everyone. Welcome to Trading a Smaller Account. Welcome to a fresh new week in the markets. I've got Rachel Deschelle here with us in the chat. She is a fellow coach and knows a ton about not only technical analysis, but trading as well. We're going to do a bunch of trades today. And so if you've got any questions, please don't hesitate to type those into the chat. And between Rachel and I, we should have answers for you. We are going to look at the 13 trades we currently have on. We're going to focus on four of them, and have a little conversation around that. But then we're going to play some new trades, and we're going to focus on directional strategies, specifically long calls and perhaps maybe one stock trade. We'll just see how much time we have. Somebody had that I met at an event recently, in an in-person event, said you used to do a lot of those one ATR trades, and we haven't seen as many of those lately. So we're going to go back to some basics on the one ATR strategy. If you're not familiar with that, no problem. So today is brought to you by ACDC because we've got four trades that we want to put on, and they start with the letters A, C, D, and C. And there may be another A on the side. So a double A, C, D, C. And the numbers 13, 4, and 4 or 5. So that's where we're coming from today. I'm glad that you guys are all here. If you're not following us on X, you're missing out. Rachel and I are now also on LinkedIn as well. But on X, you can find us at Barb Armstrong CS and at Rachel-CS. And know that, just as a quick reminder, options carry a high level of risk and aren't suitable for all investors. Also, we use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn, hone your skills, make sure you understand what you're doing, have a trading plan in place, understand the mechanics of how to place a trade, all of that good stuff. Know there are some nuances and differences. The most significant one for us in this class is that short option positions will never be assigned early in Paper Money. That can happen in a live account, and we're going to talk about that. I want to thank all of you that are here, many of you who I affectionately call the usual suspects. So to Scott and Alex and Charles and Sharon and Frank and Will and Vicky and Life in the Fast Lane and Chris and Becca and Dom and Josh and the rest of the gang. Thank you all for being here. So I have one announcement I want to make. We're going to do a super fast market overview because Kevin Horner does a fabulous job at the market open 4 out of 5 days of the week. If you want an in-depth market overview, that is the place to go. We're going to do a little bit of trade management and then spend the rest of our time on some new example trades. The mid-year market outlook is coming up. It is for this coming Thursday, the 25th, from 7 to 8 p.m. Eastern. And I posted it on X. I'll repost it again today, but you can, click this, a link and register. This is just an image. So, there's nothing for you to click on here, but go to X, my X site, and you can register there. And I encourage you to do that. It's a really thoughtful hour that I think you'll find well worth your time to check out. Okay, so let's come over and start with, well, if I had James in the chat, we'd spend a little more time on Crocs. Remember, don't mock the Crocs. One of my favorite Crocs stories is James was wearing a pair of Crocs out working in his yard and didn't put sunscreen on his feet, and he ended up with little round sunburn marks all over his feet. So, there's your bit of humor for today and a plug to wear sunscreen, wherever you're going to be exposed. Here's our S&P 500. We're down about 0.5%. We started off the morning, up 0.5%. It's amazing how things can vary throughout the day. But, we are up 9% year to date. And we're within a stone's throw of all-time highs here. So, Chicken Little isn't even probably warming up at this point, right? We expect down days within an uptrending market. The NASDAQ up almost 20% year to date. And folks, it's what, June 22nd today? The market's been pretty dang bullish, one would say. And if you're wondering why we've focused mainly on bullish trades, it's because we're going with the trend, the flow of the market. When we look at the Dow, it is still up on the day. We can see these, wicks that are leading to the upside. And, we had a new intraday high on this index back on Thursday. And then if we look at our small caps, this is the smallest 2,000 of the Russell 3000. That's hitting a new all-time high today. Okay, so pretty bullish. When we look at the VIX, it's still hovering around 17, which is, a pretty reasonable, it shows a level of comfort with what's going on in the market right now. Okay, so let's look at the indexes. And so if we come and we have a look at our sector indices, and we look at, so I've got a 3-month in here. Tech is leading the pack and has been quite strong over the last 3 months. Industrials hit a new all-time intraday high on Thursday. Financials kind of was, in the back seat. And then we have this cup and handle pattern that has formed and breaking out to the upside. So, we may see some interesting things happening in materials also. Whoops, let me just, and this, to me seems to still be kind of consolidating, isn't it? Maybe a cup and handle type pattern still setting up, but we haven't seen a breakout above this 659 yet. Consumer discretionary, so that's kind of all over the map. And with the, some of these stocks like Amazon, and if we look at the analyze tab, that's in the consumer discretionary sector. And one would argue that, a lot of what is bought on Amazon is discretionary. And then there are some that would say that they're buying essential items on Amazon. But, it's been taking it on the chin lately, hasn't it? Okay, so let's come and have a look at some of our positions. We currently have 13 positions on. And if we look at, the first thing I look at is how are we doing today? So when we look at our buy rights, we're underwater on 3 of the 4, but 3 of the 4 are also rallying today. So if we just look at these quickly, and this was we put these all on with the intention of them being short-term trades. So this one we put on here, our target is here. And I did come and look at this because I thought, hey, if this has come down a bit, maybe we could buy it back for less. And then when it comes back up, sell it again. So it's currently at 20 cents. And, we were paid 65 for that call. And so if we're still bullish on this and it's rallying, we could take that call off. And come Friday, if it's come back up around this 48 level, maybe sell it again. And so when we're looking at being in these trades and managing these, and you may say, well, there's a transaction fee if we do that. Well, yeah, there is. But, maybe we pocket that 45 because as it continues to go up in price, or if it continues to go up, then the value of this option will continue to go up. Does that make sense? And so if we wanted to manage this and we're trying to, get every extra dollar that we can, we might say, okay, well, where did we have our stop on CSX? And if we come to our condition here, we said, well, we had our stop on CSX at 43.44. So we may just leave that in place. But in order to buy back that call, we're going to have to cancel this order. So we're just going to cancel it because I can't sell the call if I have an exit in place. And then if I come in here, create a closing order, and we just want to buy back that call. So if we can buy that back for 20 cents, we'll buy it back. And the intention is to sell another call when it rallies. Okay, and then when we have sold that call, we'll go back in and reinstate the stop. Now, we also have one on Fifth Third Bank. And that's kind of, ticking along just as we were intending it to. Nokia, we bought it here. We had a Harami pattern that day, and then it's kind of gone sideways. But we've sold our covered call up here. So we're going to just let that one continue to percolate. And the last one was Trip, which is the one we're up the most on. So we bought that one, I guess, last Monday. The next day it gapped up dramatically, and it's still sitting under the call price that we sold, but we're only 20 some cents away. But the goal here is to be called out, come July 17th. And we would never be called out early in a paper money account, but in a live account, we could be called out early. And would we be sad if we were? No, because we'd have the money back in our account and we'd have our max gain. And when we placed the trade, we said, okay, we're getting in for 11.73. If we can make like $127 in a 30-day time frame, and you may say, well, that doesn't sound like much, but it's $127 a contract on an $11.73 investment. So it's over a 10% potential return on the total investment. So given that works out, but we still have, we're at 12.08 if we were to exit this position now, and our max gain on this would be at 13. Okay, so that's that. Now, our stocks with targets, you can see with Bank of America, so it's kind of trucking along. When it gets up to 59, we are going to exit. And why did we pick that target? Well, if we're wondering why we picked a particular target, if we come here and click on our note, this was our fib target, the fib 161 extension. So that's where that target came from. So we're going to just let that one tick along. And then with DXCM, we had, if we kind of back things up a bit, we had this consolidation pattern and it had broken out. And so on this day here, we put in a conditional order and we said, hey, if this bounces and goes up, we'd like to get in. If it goes above today's high by 20 cents, we'll get into this trade. And look at it now, it's back in this range. So when you put in a conditional order, it's not a set it and forget it. You want to continue to monitor it. So DXCM is not looking so hot anymore. So we're just going to cancel this whole thing. So we're going to cancel this order. And now you can see both the original order and the exits that we had put with it are now gone. Okay, so that's those taken care of. I want to have a quick look, and this is one of those things where we say, we should look at these every day. And so if we come and we look at our short put verticals, we're down on 2 of them. And Marvell is, ticking along doing its thing. So, and Apple is rebounding today, so that's encouraging. But CRM is looking bad. So let's look at Apple first of all. And this is one where we place this trade this day, and we have a big long wick on this. So, this was likely up when we placed this, and then it came down and closed lower on the day. And so sometimes, we can have these extraordinary things happen within a day. And then it came down another big down day and has been rallying since. So we still have 10 days to go for this to get back up above 305. And so, this is kind of marching up the hill. We're going to let it continue to march and we'll look at this again on Friday. But we're now in this situation where we're in between the strikes. And one thing that we don't want to have happen is at expiration for us not to be paying attention and for it to close in between the strikes. And so we'll make sure that on either Friday or Monday, we make a decision and we exit this position because we don't want to go into expiration and risk being assigned. Okay, so that's Apple. CRM. So CRM, now when I looked at this morning, it was actually, we had a clear candle on this, which said it may have found its bottom. So we had done 2 short put vertical trades on this, one expiring July 10th and the other on the 17th. But we were expecting it to stay above this 163 level, and it's now trading. And so we thought we were being conservative in putting this at 160, and it's now broken below both of those, and no sign of stopping yet. And so with this one, we may just want to say, you know what, this is not going the way we were expecting. And, we did 2 trades on this. So we sold this for 165. We'd have to buy it back for 367. And then the one on the 10th, we sold it for 146 and we'd have to buy that back for 385. So we're just going to exit these 2 because we could lose another 130 on this one, another 120-ish on the second one. So we could lose more on both of these. So this has broken a support level and doesn't look like it's coming back. And so on this one, we're going to just cancel and replace this order and say, instead of buying it back for 32 cents, which was the original intention, we're going to lick our wounds, admit that this one didn't go the way we were anticipating, and exit. Okay, and then we're going to go in and close the other one as well. Cancel and replace. And this was something that when I first started, I thought, well, if it's gone through both strikes, obviously I'm going to be at max loss. And yet we're not, because we have time left. And so if you see something that has broken a support level that you didn't expect it to support, and then it's continued to fall, like on Thursday, I looked at this and thought, well, we have this kind of doji candle. This may start to rally, and then this morning it looked like a bit of a doji, and then it's continued to fall. You may say, well, you know what? It's time to just admit that this one did not go according to plan. Okay, so there's our trade management. The last group is long call verticals, and I'll save those and we'll look at those another day. So somebody's saying, why wouldn't you roll it? And my view on rolls is this: if I wouldn't place that trade today, I'm not going to kick a losing trade down the road. To me, that's like hopping, like that's a denial strategy. I want to admit when something didn't go right, take my licks and move on, rather than trying to kick a losing trade down the road. So with rolling, if I wouldn't place the trade today, I'm not going to roll it. So sometimes, like with a buy right covered call, if we're close to expiration and I might want to sell the same strike again, or I might buy back that covered call and then sell another one out further and maybe up higher? Yeah, but I really like that question I like that question on the roll. Great question. So let me just um, come up and see if there are other questions. Oh, so Martin is asking if I post trade management updates dates on simulated trades throughout the week. So I sometimes will record and post in Trader Talks, but it doesn't tend to be as much trade management as it is a post-mortem. So I like to maintain things in class. Now, the strategy we're going to look at today, so if you haven't subscribed to this channel, by the way, there's a button in the bottom right corner of your screen. You'll want to subscribe. But if you come to the trade management mini sessions, and I haven't done as many of these lately, full disclosure, I do teach getting started with technical analysis on Tuesdays. So I've done a bunch of short videos and just put them here on different candlestick patterns. These two I'd suggest sharing with people who are going to get around to investing someday but haven't started yet. And then we've got a bunch of example trading plans. So here's one for long calls with 1 ATR targets. So you may want to watch this if you haven't watched it before. This is an example trading plan. And then we have one for buy rights, which we just discussed. We have one for long call verticals. We have several of those on, and for short put verticals as well. And then this is where I put the postmortems from this class. So it's if we've compared a long stock and a long call, and I will post these on X when I do them. I will also mention them in the next class so that you'll know there's something that you can go out and watch. Okay. Okay, so there's that. Okay, so let's move on to the new stuff. So one of the things that came up in the chat or in the comments that I was looking at this morning was like how balanced, if I'm doing short-term trades, should I be like in sectors? Like should I worry about the fact that I'm doing mostly tech trades? And if we look here, we did 4 buy rights. We have only one in tech. So one's in industrials, one in financials, one in tech, and one in communications. Our stock with Target is financials, but they're kind of coming around the bend. But when we come down to our short-term, short put verticals, they're all tech stocks, and 3 out of the 4 are tech stocks in the long call verticals as well. But that's kind of, tech has been the leading sector in a market that's been strong, and so we've been kind of running where it's hot. But if you notice that you're skewed this way and all of a sudden tech starts taking a hit, you may want to just start looking around for other opportunities. So that brings me to Delta. And Delta, well, I fly Delta a lot. The airlines are in the industrial sector. And when we look at this, they were, and all of the airlines, are a variation on the same theme when we look at the charts, but they went through kind of this period of consolidation. We're not going to put this in the textbook as like, isn't this a vision of beauty? Let me see if my drawing tool is deciding to work. Not that one. Let me haul out the other one. But we've got, it's a little sloppy maybe, but a bit of an inverted head and shoulders type pattern. Here's our head and our shoulders, or wherever there's a head and shoulders, you can say there's a cup and handle. And then it broke out, came back to retest, not uncommon, and is moving to the upside again. So pretty bullish. We do have earnings coming up, and so that's a good thing to be mindful of. And when is earnings coming up? We hover over this. So July 10th. So if we're looking to do some short-term trades, maybe we have a vacation fund planned. We want to go to Disneyland, or we want to go to Paris for Christmas, or we have a new car fund, or whatever it is. So if we're looking not for a long-term buy and hold, but something where that's shorter term, we could look at that one ATR strategy. So what is ATR? It stands for average true range. And if you don't have this on your charts, you can quickly add it by just coming here. If you type in ATR, I mean, it just happens to be at the top of the alphabet. If you want a good description, click on the little question mark and it'll bring up a description for you. But this tells us the amount this stock has moved on average from the low of the day to the high of the day over the last 14 days. So if we wanted to create a short-term target, it's hard to do a swing target on this because it's at 86.12 and this high is 87.39. But if we look at this ATR of 282 and we say, okay, well, what's the high of the day? Well, the high of the day is 86.20. So 86.20, and our ATR is I had done the math ahead of time. This is annoying because now all my numbers have changed. Is 283. So I'm going to switch this to a scratch pad. So here's our one ATR examples for today. And the first one's going to be Delta, and it's the ATR on this is 283. We'll go with 283. And so our target is going to be today's high, which is now 86.38 plus that 283. If we put this on earlier, we would have been closer to our target already. So 86.38 plus 283. So 89.21 is going to be our target. And then our exit on this is going to be today's low, which is 84.19 minus 283. Feel free to double check my math, guys. So 84.19 minus, it is Monday, 81.36. Okay, so 81.36. And so if we want to put this on our chart, I kind of like to put a little circle. This is when we are entering our trade for today. And then if I want to put the target on the chart, 89.21. So I just kind of draw something in the general vicinity and then 89.21. And, we are not putting a ring on this. Like, we're in it for a very short term. We expect to be out of this by Friday, within a few days. So this is a 1 ATR target. Okay. So to put this trade on, we're going to come to our trade tab. Now, we don't want to risk more than 500 to say 550. So we might come out here to this 90 strike. And, so we're going to come out to the 90 strike because that's what we can afford to buy. We are looking to buy a single, and then we're going to make this first trigger sequence. We're going to right click, create an opposite order. We're going to make it a market order that's good till canceled. We're going to bring up our conditional order and say, hey, if and or when Delta goes at or above 89.21, get us out. Oops. 89.21. And if it goes below 81.36, not going in the right direction. And I'm a big proponent of know when you're getting out before you get in, both if the trade goes for you or against you. So 89.21, is that above the current price? Yep. 81.36 below. Yep. Confirm and send. How much could we lose? We could lose this entire amount, this entire $470. Now, we'll talk about trade management on Friday, but this is something we manage daily. So tomorrow after the market closes, if it hasn't gone up and hit our target, we are going to go in and snug up the stop to 50 cents below the low of that day. And it's 50 cents because it's between $50 and $100. If it's over $100, we make it $1. We move it up to $1. So if we wanted to look at another airline, we could come and look at Alaska Airlines. And, here, we had this kind of double bottom pattern or cup and handle pattern. You might say double bottom. Someone else might say, well, but what about that little dip over here? And you'd be right. You're going to measure, the potential move the same way. 34 to 47 is about a 13-point move. So you could put in, we could be buying shares of stock and we could be putting a 13-point move on it and saying, well, we think this might go up to around 60, which is interesting because that's the previous high. So we could do that, if we wanted to do a stock trade. If we were interested in something shorter term, so we could do 2 trades and compare them actually. So with Alaska, target of 60 with the stock, and this is in our snack bracket because we can take a position up to $5,000. And then where would we put our stop? Well, we might say we're expecting it to stay above this 47, 43-ish range. So if it goes, say, more than 3% below that, so 47, 43 times 0.97. So if it goes below 46, now it came out to 46 even, you might want to make it 45.89, say. And then if we did 100 shares, how much are we risking if our stop is around 45? We're risking about 400. Now with a stop loss, it doesn't guarantee we're going to get out at the price requested, right? Right. So we're going to do 2 trades on this one. One, we're going to do a stock trade, and we're going to put in our target up here at 60. And this may take a little while. This could take a month or so, right? So we're going to come here, buy custom with OCO bracket. When it gets to 60, we want out. Or if it comes down to 45.89, we want out. Okay. Oh, this didn't. Okay. So we want to buy 100 shares of Alaska Air at $49.97. We want to sell when it goes up $10 to 60 or down $4 to 45.89. And again, if it gaps up or down, we might not get out at the price we requested, right? And we're going to compare this. Well, on this one, let's just do this as our strategy. We won't do the 1 ATR on this one. Now, why did I change my mind on that? Well, if we come and we look with the 1 ATR strategy, and we're up today 1.3%, but it's been kind of going sideways, hasn't it? It's been trading in this range. And when we're doing that 1 ATR trade, we really want something that is in momentum. And so this may really move and we may say, geez, I wish I'd done that 1 ATR. And we may not. But here's our here's our entry for this. And we decided to do a stock position on this in just a sec. Okay. And this one, I wrote stock target. I didn't change it to show our target on the right. And I find that that visual can just help. Okay. So there's Alaska. And when we kind of look back on this, I'm going to extend this to the left because, you know, this may be kind of a big double bottom setting up, and we're just trading it back to the previous high. You know, when we step back and look at it from a longer term perspective. Now let's look at C. So this is a banking stock, Citigroup. You know, if we come out here, diversified financial holdings, you know, and if you want to look at analyst reports on this, you've got 6 to choose from. Not uncommon to see that there's a mixture of, you know, buys and holds, right? But when we look at this and see that we've got this inside day to day. Since this stock really started taking off, we haven't had more than one down day in a row. Like from this low here, one down day. Well, here we had two, a single day, single day, single day, single day, and then we have this Harami pattern at a potential. And if you're not sure what a Harami is, it's where this candle is inside the body of the candle of the day before, and that's considered to be a bullish pattern and a complete pattern. And so if we come over here and we see, well, we've got earnings coming up in July again, you know, so do we want to do a longer term trade? If we want to avoid trading over earnings, why might we want to avoid trading over earnings? Well, if we're doing a short-term trade, we're trying to take advantage of momentum, and stocks sometimes will either gap up or gap down on earnings. And if it gaps up, like Bob's your uncle, we're, you know, in great shape. But if it gaps down and we're doing a shorter term trade, then, you know, it can be tough. But Andy, I really like the fact that you noticed that earnings is coming up. We want to be aware of these things. Okay. And so if we were to do this kind of one ATR trade again, where, you know, there really isn't an appropriate swing trade, like which was yesterday's candle at 147, you know, what is our ATR on this? Well, it's 363. And our high of the day, if we hover over the candle, 146.37. And our low is 144.48. So to tee that up, we'd say, okay, C, the ATR is 363. Our target would be 146.37 plus 363, which is 180 on the nose. Yeah. So yeah, Bob's your uncle came. I finally looked it up because I've used that expression my whole life. Like Bob's your uncle, easy peasy. Like um, Bob was a member of Parliament in London, England, and he got his nephew a really cushy job. So it became a common expression in England to go, "Oh, easy for you, Bob's your uncle." You know, that's how you got that so easily. Yeah. So just if you're wondering about the history of one of my dorky expressions, there you go. Minus 363. So now you know who Bob is. 140.85. Does that make sense? 144 plus 363. Okay, 146, 150. That's 150. My handwriting's bad, obviously. If I could read my own handwriting. So 150. Yeah. Yeah, so somebody's saying earnings can be a bit of a coin flip. And, you know, I don't want to be flipping coins with my money. I work hard for my money. Yeah. So yeah, if we look at this like 143-ish level as a potential support, that, so, but this candle pattern, this Harami at a potential support level is considered bullish. And so I'm just going to take this line, I'm going to repurpose it, and we're going to make this our target to try and keep our thing clean. And so this is our 1 ATR target. And we'll show that on the right. And we're placing this trade today. So if you want to say, well, when did we place that trade? Today. So now we're going to have two trades that we need to follow up on. And those I'll review on Friday, but I will do my best to manage those day to day. Oh, Jay said that, she's now picking up some of these expressions. Yeah. Okay. So let's go place that trade. So, and here, if we do the at the money strike, and when you look at the trading plan, so one of the things that the trading plan is going to say is, okay, is this in a sector that's uptrending? So if we come to financials, yeah, like from here, it's had a big move. So it's an uptrending sector. Is the market uptrending? Well, we've already talked about that. So the market's uptrending. Does this stock trade at least 1 million shares a day? And do we have a buy entry on the chart? So yes, we have a buy entry on the chart. It's already traded 5 million shares today. So check. Do we have a tight bid-ask spread? So whether we're looking at this strike or this strike, is it less than 10%? Yes. Do we have at least 20 times the number of contracts we're going to trade? Yes. So check, check, check. And then on the, is the market uptrending, sector uptrending, stock uptrending? Check, check, check. Okay. So, it's like, okay, I admit Dork on steroids. When I first started, I created a checklist for every strategy, and I'd go through and go, is the market uptrending? Is the stock uptrending? Is the sector uptrending? I would like, do we have this, etc. And if you're new to this, that's not such a bad thing. I had a photocopier. I wasn't afraid to use it. And, once you've done this for a while, it becomes a little more second nature. Okay, so now if we're looking at, if we don't want to go over 500 to 550, we could do this one. But if we're erring on the side of caution, we're going to go with this. We're only going to buy one because two would be against our position sizing rules. We're going to buy a single, and this is just a different way of putting in an OCO order. Make our advanced order first trigger sequence. We're going to right click, create an opposite order. We're going to make it a market order that's good till canceled. And our conditions are, we want to exit if it goes above 150. Okay, we're at 145. All right. So that makes sense. Or if it goes below, whoops, if it goes below 140.85. And this one, at the end of the day tomorrow, if it hasn't gone up and hit our target, we're going to move the stop up to $1 below the close of tomorrow's close. Because we either want to hit it or quit it. Okay. Yeah, Sunny is saying I need to make a checklist. Like I seriously did. I typed them out. I can't believe I'm admitting to this. Yes, I did. But then here I am, right? Like I came to this as a client watching these webcasts. So there you go. I never thought I'd end up on this side of the screen. And now I've been doing this for like 10 years. Okay, so long calls. 1 ATR. And this is our 1 ATR target. All righty. So we're in. So what have we done today? Well, we got an order that I did a test because this is saying that I don't have any funds available for trading. And so I didn't know if my trades would go in. So I did a test. But we exited our positions on CRM. We admitted that those did not go according to plan. We placed a trade on Delta. We bought, so that was a one ATR. We did a one ATR trade on Citigroup. And then we did a trade with a target, a stock trade with a target on Alaska Air. Now, we didn't get to Crocs. So maybe I'll have to save that for Friday. But here's another stock that was struggling for quite a while, and all of a sudden it seems to have broken out and be moving to the upside again. So we've said for years, don't mock the Crocs, but that's another one that you might want to have a look at. I don't know. I'm glad that just didn't shut down. So guys, thanks for joining me today. I appreciate you being here. JP Morgan was another one that we could have had a look at, but we ran out of time. So thanks for joining me. Keep in mind that all these examples were for example purposes. Hit the like button, subscribe to the channel, follow us in the land of X, Barb Armstrong CS, Rachel Dash CS. Rachel, thanks for being here. Thanks to the guys behind the scenes for helping bring this back to life. And thanks to each and every one of you for continuing to show up. Your future self will be grateful that you did. Take care, everyone. I'll see you tomorrow for getting started with technical analysis. Stay tuned. James Boyd is coming up next. Bye for now.